Hello friends, good week. How are you? How is your weekend? Well, welcome to my weekly review, 9th of May 2011, the second week of May. Well, what a week heavy we have had on the previous week. It was one of the best weeks since the since the beginning actually of this year. As we all remember, January and February were two bad months. The market was zigzagging all over these 2 months, all over the time, and and then the new trend began to begin to fulfill. And now we are this week actually we experienced a critical, beautiful, very beautiful correction, a big one. And may it be the change of the direction. Well, let's discuss about it and let's see what potential trades we have for the upcoming week. So first of all, I would like to begin with the euro dollar, the most fresh pair actually. Well, we were talking about this divergence, right? And once again, I just want to mention you the things I always say. Divergence never lie. Divergence never lie. You can remember that because they never lie. They could they could not change direction fourth time. They could not change direction the second time. But the move come once the move comes, it's so quick. It is so fast. It is so powerful that no one actually can stop it. And the only thing to do is to join it. And that's exactly what at final happened during the end of the previous week. Well, this crash down, this powerful, powerful falling of the prices actually happened because of the fundamental news, and the fundamental news come from Greece. There are many speculations just right now that Greece are thinking about leaving the euro actually, and that caused many speculations, many big volatility and big news for the euro actually because Europe made all it can for to help for to Greece and for Portugal and for many other countries, but for Greece especially. And now Greece are thinking about leaving the euro. What about all the money Europe actually dedicated to them, right? Contributed to Greece. So that's exactly why the euro is. That's one of the reasons why euro is falling so hard. And um, actually, the euro could continue easily, all the way to the next support line, which is 142. 30, 142.50. sorry, sorry. That's the level we will probably see in reached on the upcoming week. And then it will be very interesting to see what it's going to be next. The investors, by the way, are still long, still holding their long position, and they still think this drop is just about to end, and the direction will come back. The full direction up. Euro almost reached the 150, which was the level actually um, all expected it to reach before the crash, but after Trichet's news and Greece news, no way the euro will continue up at the end of previous week, and it dropped away. So what's next, friends? I am still bearish for the next support. It could even be deeper for 142. It could even be deeper for the 200 moving average and meet it after a few weeks, and that's the 200 moving average, right? The daily moving average. The RSI just crossed the 50 level down, so it could be actually a change of the direction. But for on the meantime, let's go for the weekly chart. What do we have here? We have a 3 candle engulfing, right? We have a 3 candle engulfing. It could provide us with a correction and then another drop, probably for the 20 moving average of the weekly Bollinger Band. So, and actually the trend is still bullish, right? The trend is still bullish. Maybe this uptrend line of the weekly chart is just going to be retested. This line we all could remember, right? Maybe just retesting just right now, few more weeks, and then continue up. So that's the investors' uh, expectation actually, and we will not guess right now what's going to be the next direction, but we will just join as the direction is for now. Direction is bearish. For those of you that hold a position, down, the next support, as I've mentioned, 142, 30, 50, somewhere there, and the support line is the next target, and that's the levels you should look for. For those of you who are out, actually look for a retrace. If a retrace happened before this support line is reached, if any retraces happen, then just join it with stop loss above the last high and aim this target. That's about the euro. What about the next interesting pair, the British pound? 4 hour head and shoulders. It broke down, retested, and it looks like we continue down. But we should pay. Let me just now, after you saw this head and shoulders, right? After all this, we still could see a potential divergence just right here. We still have the support line around 163.50 level. If it breaks down, the next support line would be 162. 30, something like around these levels, 162.30. So on, let's say the daily chart also broke the 20 moving average of the Bollinger Band, means it should continue down, but first we have this support. If it breaks down, we have the next support, as I mentioned before, 60 to 30, maybe a little even higher, 60 to 50. And of course, if this one will be broken, then we could also imagine for the 160. From the weekly chart, once again, as the euro, we have an engulfing, 3 candles engulfing actually, right? 3 candles engulfing, and it should correct, and then we will see. Maybe this engulfing is pointing on a change of the direction. But for the biggest change of direction, we will have to wait for the British pound for a break of this uptrend line. Until then, it is only a correction. For the next pairs, friends, I am going to talk about the Australian dollar. Well, what a situation we have had. The previous week, you got on the weekly review a recommendation to enter the aggressive point, right? 110. That was the level. 110. I told you, sorry, for the aggressive mode, just put a pending there with a stop loss around 60-70 pips and a profit at least 4 or 5 times bigger. Correct? Correct. The final target, by the way, was this support line, as you could remember. Sorry, once again. Alright, so what happened? 110 level was reached, and PAM all the way, one way down, almost without corrections, one way down for more than 400 pips. Once again, friends, I want to mention this thing. Divergences never lie. Divergences never lie. And we have had all this histogram divergence on the daily chart and on the 4 hour chart just right here. It was continuing, continuing until it happened at final. So divergence could lie once, could lie twice, but then it will provide with a big move that will cover all the losses we have had before and provide much more profit. So for example, if you took the first attempt here and falls of 50-60 pips, then again falls of 50-60 pips, then the next divergence was provided actually the 400 pips move, right? And that's how it happened. What's next for the Australian dollar? The weekly divergence is still here, but to be honest, and you can see it, it's clearly uptrend line. Once again, all the majors look the same just right now. We could see more correction for the 20 moving average of the Bollinger Bands, which would give us 104.50, 70, something like that. But the Australian then should continue up. It is still early to guess what we're going to be, because don't forget we are just about to have June in front of us, and in June the QE, the halving problem of Bernanke, will come to its end. It will be very interesting to see what is next, and probably then the direction will be just pointed. So that's about the Australian dollar. Still bearish because of the weekly chart, but on the 4-hour chart, it looks like we are going to see another down move here, but divergence could actually stop this move. So some controversial between the daily and the weekly and the 4 hours, and that's why in this case I prefer to stay out. I do think the Australian will move in between this range now, zigzagging up and down before we will see something more powerful. Once again, if it breaks down, it could go for the 20 moving average of the Bollinger Band, which is 104.50, something like that, maybe even little lower. And of course, if this level will be broken, we could imagine even 102, which will be serious, beautiful correction. That's all for the Australian dollar. What about the next pairs? Dollar franc. Well, on the live trading room, we were talking about an aggressive mode. 0.85 it was, and I've said if that's a good level to begin buying the dollar franc. Actually, for those of you who are on the live trading room, congratulations. I've got some emails from your friends letting me know, updating me about your profits. Bravo. That's all what I can say, and I'm glad, always glad to help actually. Well, what is going on with the dollar franc? Let's see the weekly chart here. We have an harmonic pattern, which means it could actually change the direction, bullish butterfly, which could take us, if it's correct, to 0.99. That sounds amazing, right? How can we join this one? Of course it will not be one way. Of course it will not be one way. Well, we were talking about this downtrend line here. It is broken and it's good to be in. For those of you, sorry, not here. For those of you who are out yet, well, that's the 4-hour chart, right? We have a resistance here. Probably it will cause a correction. Look to buy the dollar franc after the correction. We could see more up move from this beautiful pair. Of course, if we have now, it's a daily chart now, if we will have a down move and another low and a bullish divergence being created here between the possible next low, just right here, it will be the best way to join then. But as for now, the 4-hour chart, it's the best chart to look for opportunities to buy. Correction for the 20 moving average for the Bollinger Band, it could be the good possibility to look to buy if it stops on this level. Of course, if it stops on this level. If it does not stop, don't buy it. Stop, I mean bullish candle pattern plus hidden divergence. What about next possible interesting pair? Euro British Pound. Well, that pair actually failed me on the beginning of the week. I was talking about this double top just right here. It looked so correct for the down move, but then it broke up because of the bad news from Britain that took this pair all the way up for the next resistance. Actually. Well, it missed around 30-40 pips for the next resistance, but you know when we deal with weekly and daily chart, 30-40 pips is not a difference. It's not a difference. When we are talking about 200 pips move, 30-40 pips is nothing. It's just a range. Well, so it actually reached almost few pips missed from the biggest resistance, and sorry, and after Trichet news and Greece news, it dropped down powerfully, so powerfully, so no one actually knows what to do now. I think we are bearish, but pay attention, we have a powerful support here, and we have a powerful support on the next level. Well, it does look bearish, but let's see how it will deal with the 20 moving average. Sorry, 200 moving average of the daily chart. I believe we'll still have a down move for the next support around 08650, but friends, pay attention. After such big, fast down move, it is risky to join. We could have a drop, a correction powerful and quickly, very, very, very easily. And that's exactly what I mean. If we have a correction here, then it will be good idea to look to join the sell. If this support is broken, it's also good sell all the way for the next support, which, as I mentioned, 08650. Once again, a few pips range up or down more. It's a range, so don't be greedy and try to take until the last pips. That's for the Euro British Pound, a good another opportunity for the upcoming week. Well, these are the major pairs. We also have had the Swiss against the Japanese yen, right? As you remember on the previous week, I was talking about this divergence here, and you all remember this one. I said as long as it is below 94, look to sell. I know many of you took this one. That's what we have had. A more than 200 down move. Down move for the Swiss yen. It's a lot. I still think this pair could drop more. So 80% is definitely on the pocket already, 80% from the trade. But 20%, let it work, friends. No one actually knows where it will stop. So that's another pair to hold, and actually that's all. As for now, we also have the British pound against the franc, but this one very depends on the dollar franc behavior, as we have this resistance here on the British pound against the franc, 144 actually. So it's very important to see how the dollar franc began this week. Of course, I will update on the blog about this trade. Well, that's all from the majors. That's all from the pairs. Now let's take a look what's going on with the commodities. Uptrend line on the gold. Harami on the gold, sorry. 50 level of the RSI holded, but stochastic still pointing down. It does look bullish, but let's wait for the stochastic. If the stochastic crossed, we will have a hidden divergence here. Means probably we could have another up move for gold. The silver almost the same. powerfully, critically dropped down, very surprisingly, actually, all the way for the support around in 34. There is next support around 3170 and another one on 30. That's actually the 2000 moving average, 200 moving average. Sorry. Well, what's going to happen? It's almost a hammer, almost, but not exactly, not beautiful hammer. We could see also a beautiful correction of the silver. How can we join it? With a break of this critically beautiful downtrend line of the 4-hour chart, of course, or just another up and down move for completing of a divergence and then attack. Two opportunities to join only depends on what market will do. Will it break straight the uptrend line or will it drop more down to create the hidden to create the divergence and then everything could happen of these two. Well, and also I was talking about indices. I've mentioned I mentioned 1370 level as a potential level to drop. Look what level was reached, 1370, and we have had a drop. Now we have also an uptrend line, right, being retested just right now, and everything could happen on this line. Everything could happen now, up and even down. And that's why, as we can see, every pair reached critical areas now, and everything could happen. So what should we do? We should let the week begin. Then I will update every trade. As if you followed the last week, you know the blog was updated every day because every day the market did something. Every day the market did something, right? And well, I will update, of course, this week as well because we are now experiencing critical levels, critical areas. Everything could happen, and many things will happen. Friends, thank you very much for your time watching this video. Let me once again invite you to join our new SRS group, a free group on Skype. You are invited to discuss each with other there about SRS trades, to share, to profit together. The last week of the SRS group, the trades that were given there were amazing. Almost 90% success. Just amazing. And thank you very much for those of you who help there and share with new friends and the newbies to the market and to SRS. Thank you very much. I appreciate it very much. I love this group, and I know you love it too. How to join? Just add me to your Skype, Vladimir.Ribakov, and I will add you then to this group. It's free, totally free group that everyone could discuss about SRS there. Well, that's the latest news. And one more thing, I'm going to have a seminar on London, and you got the emails about it. I will be more than happy to have you there, to meet you personally. And in this seminar, I am going to share all my personal secrets about divergences. Not as you have here on the weekly reviews, because here it's impossible to share the secrets, just to share the potential trades. But on the seminar, I will finally open all my cards, as I was asked to by many of you. Uh, Many of you asked me actually to share all I know about divergences, and that's exactly the first place I will do it, and the first way I will do it. I will be very happy to see you there, friends, and to meet you personally. I really want to meet every one of you personally, and to move forward in our forex trading. So, friend, thank you very much. Have a fabulous, amazing week, and I will meet you on the SRS group and on my blog with the updates. Yours, Vladimir.